Hello, everyone, and thank you for joining us for another episode of the Financial Commute. I'm your host, Chris Galeski, and joined in this conversation today is my partner, Chief Operating Officer and Chief Marketing Officer, Stacey McKinnon. Stacey, thank you for joining me and having a conversation today.
Oh, I'm so excited about this. This is a topic that you and I are very passionate about.
Yeah, investing in uncertain times. As I think about it, there's always times of uncertainty, so you're pretty much just stuck investing in uncertain times always.
It's true.
We never really know what's going to happen tomorrow. But as I was thinking about this conversation, it comes back to the point of why do people invest, period? Mm-hmm. And for the most part, people have to invest. Number one, it'd be un-American not to invest.
It's true.
But number two, people need to invest because of inflation, because of uncertain things that can happen in life, because they need to replace a paycheck when they walk away from work. There's a whole host of reasons why people need to invest. And it takes me back to that bucket approach. And if I was going to design the perfect sort of investment strategy for me, I'd make sure that I've got one bucket that's my emergency fund that takes care of all my needs. I would then figure out how much money I need to put in that second bucket that's going to drive the income that I need to live my life. So what's my spending plan? What's the lifestyle I want to live? How much money needs to go into that bucket to drive that income? And then whatever's left, I can invest towards growth, long-term appreciation, covering the cost of inflation, long-term care, the unknowns of the world. And so today it's with all the uncertainty that's going on, some people are really worried about that second and third bucket. And we've got to have a lot of different conversations with clients. What's going to happen when Trump comes into play? Yeah. These geopolitical risks and wars, how do I manage that? Are there opportunities in AI? Should I be doing this? It's so fascinating, the number of conversations that we have day over day.
It's incredible. Just even to hit on your bucketing approach, I not only do the bucketing approach, but I actually have different accounts for all of those different things. Because I like the idea of looking at an account and saying, oh, that's my travel bucket. Yeah. That's set aside for me to enjoy life. I don't have to feel guilty spending that instead of saving it in a 401k or something like that. And so I love the bucketing approach for that reason.
The travel bucket is the one where you now all of a sudden don't have guilt because you told yourself that's what this is for. Yeah. And it's awesome.
And then I try to leverage points to make the travel bucket even bigger. It's a whole really, really, I think, strategic game I'm playing to go travel more. But I think the bucketing approach is very important. On the point that you made, though, around clients coming to us and just feeling so much uncertainty, whether it was around the election or inflation or AI, one of the things that I try to tell clients is just ignore it if you can. I think that's a little bit different than being a member of society and being an investor. So as a member of society, I don't think you can ignore it. I think we have to be educated. We have to understand what's happening. Politics, war, inflation, news. I think it's an important aspect of how we live our daily life. As an investor, though, if at all possible, I want client portfolios to perform well, regardless of what's happening in the headlines. And I think one of the challenges that I face in having these conversations with clients is that it feels like because the headline news is so much entertainment today, it's a lot of propaganda. It's a lot of in-your-face scare tactics. Sometimes that translates into how they see their portfolio. And I know that for us as a firm, and you and I have talked about this a lot, it's so important that we find investments that ignore that noise too. So not only emotionally having our clients ignore the noise, but then actually finding investment opportunities that ignore that noise as well. Because in today's world, almost every headline has some type of a repercussion in the market, whether it's in stocks or in bonds. And if we can give our clients more investments that are not impacted by the headlines, that makes me feel like we've done our job. It's so fulfilling to think about a world where our clients can sleep better at night because whatever they hear on the news doesn't impact their retirement, saving for college, going on those trips and traveling. So.
Yeah. Megan brings that up a lot when we talk to her about the investment strategies that they're looking for our clients. And it's not that we don't love stocks. We like stocks. We think that there's uncertainty around how they're going to perform. So Megan's always looking for things that are going to, be a little bit more consistent, be able to weather times of uncertainty, and to be able to provide that consistent return and that anchor to either generate income or get the growth that's needed, because stocks are just somewhat unknown.
You just don't know what's going to happen. And so the next question becomes like, how are we going to access these magical things
Yeah.
that are not impacted by the headlines that we hear every day? And there are some really interesting stock substitutes out there. Like, do you mind sharing a few examples of those?
Yeah, I mean, one is like a really small sleeve with the manager that we have, and it's whiskey aging. And people oftentimes like, there's so many different ways to make money out in the world of investing, but whiskey aging is actually fascinating to me because not only is it a really good diversifier amongst traditional stocks and bonds, real estate, other things, but there is real value in high-end aged spirits. Because you can own it, it's going to appreciate in value. People are going to continue to consume that type of spirit, and so it's a way that we look for things outside stocks and bonds. And then there's obviously the real estate stuff that we do. I mean, whether it's industrial real estate, building out distribution centers so that way we can get our Amazon packages quicker. Whether it's filling the need for more housing, senior care facilities, or just about anything. I mean, I love real estate as a diversifier, but there's a lot of different places that you can go besides just investing in stocks.
Yeah, and one statistic that I heard on the whiskey aging is that a barrel of whiskey that's aged 4 years is 4 times the price as one aged 1 year. And so if you just think about the simplicity of that, if you can invest into something and over a 4-year period, the price grows by 4 times, I mean, that's not that different than investing in the stock market, but you don't have stock market risk. You don't have headlines and news causing your whiskey barrels to go down. Like that's not, those two things are not correlated together. Right. And so I love it that we find investments that truly, yin and yang. It doesn't matter what happens in the news. They're still going to perform well. I was actually reading a very interesting statistic not that long ago. It was talking about how many people are moving into investments like this. Yeah. And it was something like 52% of investors are going to be seeking out alternative investments in the new year. Just really, really fascinating and interesting. And so part of our job as advisors is to stay on top of that and to continue finding these things that are just maybe a little off the wall, but fundamentally make sense a little bit more than some of the market, right? Apple is a really complicated company. So many subproducts and different business lines would take forever to understand. Yeah. Whiskey aging is a little bit more straightforward. It's like you produce the whiskey and then you put it in a bottle and you sell it. Yeah. It's fascinating how some of these alternatives are more simple.
It really is. And on that note with alternatives, I mean, I think you'd shared something with me about endowments looking to increase their allocation to alternatives by 52% next year. So if you're an endowment that really can actually have a long-term mindset on investing, and let's say they've got 10% alternative exposure today, they're looking to go to 15% next year. Or if they're at 20% today, they're looking to go to 30%. And so alternatives are a big reason or a big hot topic in the investment world today because stocks are uncertain, bonds aren't really providing a lot of diversification. And so let's talk a little bit about fixed income. And so I know as a firm, we invest a little bit in traditional bonds, but we look for other places to find income. And some of those are in the alternative space. Talk to me a little bit about the importance of some of our fixed income alternatives and what we look at there.
Well, even if you just think about fixed income and bonds and the history of fixed income and bonds, it used to be a few decades ago that an investor could have part of their portfolio in stocks for growth and part of their portfolio in bonds for income. And that provided a safety net for them. That was fairly consistent. Over the last 10 years, do you know what the return has been in the most popular bond index?
Oh, man. I'd say it's probably close to 2%.
1.5%. Yeah. 1.5% returns in the bond index. That is not enough to live on. Have you been to the grocery store lately? Why is my grocery bill $300 a week for 2 people to actually be able to eat every day? It's incredible, right? And so we look at what's happening in bonds and how it's not that safe haven it used to be. But for all the clients we work with, they still need the income. They still need to provide their lifestyle. They have to pay for that grocery bill that has gone up. And so the question becomes, where can we find investments where we think the safety is there, that there's a lot of downside protection for our clients, but the income is much higher? So that's been something that's been a constant evolution for us as an organization is how do we increase the allocation to our clients to these higher yielding, higher income investments. And so just some examples of That might look like giving a private loan that's backed by real assets of a business. Those real assets could be real estate, they could be inventory, they could be machines. But by providing private loans backed by real assets, we're able to get higher yields by just going into the private space instead of the public space. There's also loans that we can give to what I would consider like slightly recession-proof businesses like food companies or medical, because even if a recession hits, people still have to eat and they still need their medicine. And so if you can find in the private space some of these loans that provide more income and we think are more recession proof or protect on the downside, our clients are going to be much better off no matter what happens.
Yeah, I couldn't agree with you more. I mean, this is something that we've been looking at for quite some time and continue to do. But again, like a traditional bond is just a loan.
Yeah.
It's the same thing as making a private loan backed by real estate or trucking equipment or food or healthcare royalties. I mean, you're making the same trade-off, and it's a little bit easier to understand the asset that's behind it. And if we can get definitely a higher return or more consistent one, it's an attractive opportunity to be in. And I think that's why a lot of endowments are looking at reallocating dollars to the alternative space.
How can we find these things? And this has been something we've been doing for years and years. So what's nice for us is that we have the due diligence process. We're able to evaluate these things because we've seen them before. We know where there's red flags or what the operational documents need to look like. And so that's been part of our ethos, but it's something that we're continuing to pursue. I know that there's also a few other areas that we try to dig into when it comes to diversifying away from just traditional stocks and bonds and into these alternatives. What else has been top of mind for you as you think about creating more resilient portfolios for our clients?
I mean, if I just look at the elephant in the room, I mean, you've got $35 trillion worth of debt here in the US and probably $100 trillion or more across the globe of money that's been printed and put out into the system. And, you know, that led to inflation, which is just basically devaluing your actual dollars that you have in your pocket. And I know it's a hard concept to understand, but like if you go back to the early 1900s, an ounce of gold was around $200 an ounce. And that could buy a really nice Italian suit. Today, gold's at what, $2,600 an ounce? Guess what? It can still buy a really nice Italian suit. And so there are a number of different types of investments, whether it's gold, and some people, you know, think Bitcoin, where there's a store of value in an asset that's going to do well over time, especially in times of uncertainty and in times where things are inflationary. Bitcoin is something that we're fascinated with and look at. We haven't even dipped our toes in the water yet. We're still looking at how that might perform during, you know, really bad or tough times. But look, it's hard to ignore something that's now worth $100,000 a coin that, you know, 10 years ago was just sort of like, is this a thing? I'm not really sure it's a thing. I think it's just a concept, but more and more institutions are actually getting behind it. And it's something that we continue to look at as well.
Yeah, for most of our clients who have the financial opportunity to invest a little bit in Bitcoin, it's not necessarily a bad idea. As long as that's not what you're betting your retirement on, I think that it's fine to explore that a little bit. And I see the argument for it being complementary to having gold in the portfolio as well.
As we talked a little bit about like the alternatives, so we're using alternatives, whether it's the private lending or the whiskey aging or the real estate, as an alternative for stocks and or bonds. Like, what are some of the biggest risks that, you know, people face by not having more money in the stock market or trying to avoid U.S. international stocks or more traditional type assets?
Yeah, I think FOMO might be the biggest risk, the FOMO being fear of missing out, right? I've had lots of conversations with clients where they have dinner with friends or they're sitting on the couch with their children and they're chatting about the markets and they say something to the effect of, oh my gosh, I made this much money in NVIDIA. I made this much money in Apple. That can feel really, I think, deflating to somebody that is choosing to invest in alternatives that are a little bit more just consistent, in many ways dependable, things that they can like touch and feel and see. You almost have to ignore that noise too. You almost have to stop yourself from comparing yourself to your friend or your child who has a different profile than you, different risk tolerance, different years ahead of them where they can afford to take on different levels of risk in the market. We still think stocks are a good play, not for your whole portfolio. Generally speaking, it's about a third or less of the portfolio that we're allocating to stocks. we just think that there's other opportunities that exist that are just going to allow you to sleep better at night. And so I think one of the biggest risks that investors face is that FOMO. And if they can get beyond that, I think that they'll really appreciate what the alternatives can do for them.
Yeah, the fear of missing out is a very real thing. I
Yeah.
mean, it happens across the board, but it's not only, that's why a financial plan is so important. It's not only the return that you want to have and be able to be part of those conversations, but what's the return that you actually need to have in order for all of your dreams, wishes, and thoughts to come true?
Yeah.
Oftentimes, those are two very different things.
Yeah.
I mean, I was talking with a client recently that, has enough money to sustain the rest of their life and do everything that they want to do. And they said, hey, Bitcoin's at 100,000. Should I buy some? And I said, okay, Mr. Client, like let's just say we took $50,000 and we invested it into Bitcoin. And let's say Bitcoin actually went to $1 million. So you got a 10 times return. So you had $50,000 grow to $500,000. Will that change your life, or will you do anything different because of that? And his answer was no.
Yeah.
He said it just might feel good.
Yeah, he just would like it that he won.
But don't lose my money,
Yeah.
So I don't want the 50,000 to go down to 20 because that would be more painful. So, he chose not to do it for other reasons, but yeah.
But that's a good point. I mean, look, we've had essentially 15 years of fairly up markets, a few blips in there, but other than that, it's been fairly consistently up. And so sometimes we forget about what a down market feels like, what it means to lose money. Yeah. Can you share just your perspective on the market today, what the downside risks are that exist, and why maybe avoiding them for the more consistent returns might be in some investors' best interest?
Yeah, I mean, avoid is the most common word to be used with this when you're making exchange for one investment for another.
Yeah.
But in reality, like, we're still participating in many of those things. So as a firm, we're not avoiding it completely. But at the end of the day, with where valuations are today, they're higher from a price to earnings, a price to sales than they were in 2007, 2008. They're higher than they were back in the dot-com bubble. I mean, we're at expensive valuations in terms of price. So right now, if you're looking to add dollars into the stock market, you're buying it at a high price. This stuff is not on sale. And so when we've had a couple years, like we've had the last couple, or even the last 15, you've got to look out the front of the window and say, what are the returns that I expect going forward? And they're not likely to be as high as we just saw. And so people would benefit by taking a little bit risk off the table, because if they don't, they could realistically see in a normal, recession or normal pullback, a 20 to 40% loss in the value of an asset.
Yeah.
And that's things like traditional stocks with great companies. But, something like Bitcoin, it's gone down 70 or 80% in value like every 4 years for the past 10 or 12 years. Like, that's a wild ride to be a part of.
Well, even if you think about the lost decade, right? From 2000 to 2010, people bought in at the market at the highest valuations that existed, participated in that crash. It took them 10 years to earn their money back.
Right.
So you have things like the lost decade in stocks. You have what I would maybe even term as the lost decade in bonds the last 10 years. Yeah. These things have a place in the portfolio, but I don't know that they should be the majority of the portfolio. I think a nice 1/3 exposure to the markets and participating in the upside and cheersing with your friends at dinner is good, but then maybe the other 2/3 can be some things that you can have more confidence in.
Look, I've got a client that lost a decent chunk of money during the financial crisis in 2008, 2009. They were scared of stocks for like 8 years. And then they met us. Well, so they were pretty much just invested in bonds during a zero interest rate environment. Their money was barely growing. They were uncertain on whether or not they could make some of the large purchases or vacations that they really wanted to. But when they came over to us as clients, because we had access to higher income alternatives, that provided the income that they needed to feel comfortable taking those vacations. So now we have a little bit of stock exposure for them, and they've been able to participate in this growth the last 6 or 7 years that otherwise they would not have been. Yeah. And so, there's the flip side of that too. I've got some clients that are like on the edge of, can I retire? And they ask themselves that next question, well, how am I going to get a paycheck when I do retire? And you look at their portfolio and they're primarily invested in stocks. And the reason why they're so not confident with making that decision is because the uncertainty year over year. And so by having conversations with them and being able to, build out that income bucket to generate enough income for them to be able to walk away from work, they've never been happier. They're not looking at their portfolio. They're not worried. They're taking vacations. And so it's not about avoiding something. It's just having the right mix for you, in my opinion.
Yeah, I love that story that you told. And as you were talking, I was thinking about how there's really two goals and objectives most investors should have. One goal and objective is maybe a little bit more straightforward. Am I investing in good opportunities? Am I investing in opportunities to provide income if that's what I want, growth if that's what I want? I think that's one step. But the second step that you just described is, are my investment choices leading to a better life? Are they leading to travel? Are they leading to retiring at the age I want to retire? And I think that that's really powerful when clients can think about their investment goals as those two parts. It's one, am I investing in the right things? But two, are those things leading to me living a more fulfilled life?
Yeah, I love having these conversations and customizing things for clients. It's a lot better than, hey, what did you do? Okay, cool. I'm going to do that thing
exactly.
too. Stacey, I've had so much fun having this conversation today, talking about how to invest in uncertain times. Odds are pretty good over the next 20, 30 years as we work together and, talk to clients. There's going to be a lot more uncertainty down the road, but thank you so much for today.
This was great. Thanks, Chris.